It's crunch week for BHP's $75 billion bid for Anglo American, and the South African government might be the wild card. The housing market gets into a rhythm with 7 in 10 houses sold last week, and we'll tell you about the $91 billion man who you probably haven't heard of. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 27th of May, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up today with Matthew Kidman of Centennial Asset Management.
Yeah, so we talked to Matthew all about where the share market's at. It's been going, well, as in his words, it's been shifting sideways for a couple of months now. What's the outlook? What sectors does he like? What sectors doesn't he like? And as always, Matthew drops a few names that he thinks might be worth thinking about when you're investing. Obviously, we always say go and find a financial advisor because we're not an investment podcast, but it's well worth listening to Matthew to give you some ideas.
Yeah, certainly is. It's a good one. It's coming up after the show, so stick around for that one. The main story this morning, Sean, it is crunch week for BHP's $75 billion bid for Anglo American, with the deadline now set Wednesday night, Australian time. And analysts reckon a deal could get done, but the sticking point here is the structure.
Essentially, under the current proposal, there's a bunch of assets which BHP wants spun off before any takeover, and another bunch which will be reviewed after the takeover. That really is the sticking point. BHP has said it made a final offer ratio, which is a ratio of BHP shares received by Anglo American shareholders if the deal goes ahead. The latest offer is one Anglo share for 0.886 BHP shares. That doesn't preclude a cash offer. That's kind of interesting as well. BHP is insisting that Anglo spin off majority stakes in the South African platinum and iron ore units. It means Anglo shareholders end up with those stakes in the offloaded assets. They carry the risk then of those deals. So if they spin it off, the Anglo shareholders end up holding shares in these two companies. And what the big investors in Anglo are saying is that actually BHP should be carrying some of that risk. It just shouldn't be our risk. Also, to do all that will take time, possibly more than a year. So for that to occur, Anglo shareholders might not actually realise the value of the bid for some time. South African regulators, they also might demand concessions before any spin-offs are allowed. Put all that together and you'll better understand why the Anglo shareholders view the BHP deal is too complex. However, some of the big Anglo shareholders have pushed the company to at least talk to BHP, and plenty of speculation over the weekend that if that structure can be worked out, the price is okay. If the structure can be worked out, then the deal might get the go-ahead. Very, very busy 3 or 4 days for boards, management, advisors in both those companies.
And of course, Sean, because timing is everything in this, there's also a South African election this week, which may just complicate things.
Yeah, so the African National Congress, the political party of Nelson Mandela, it's been in power for about 30 years, wants to keep that record going. The election is actually Wednesday, which is the deadline for BHP to make a formal offer for Anglo. The concern is that whoever wins will ask BHP or Anglo, whoever owns the assets, to guarantee jobs, capital spending, local procurement, stuff like that, even if the iron ore and platinum businesses are spun off. And in a way, I think that's probably why BHP would like all that to happen without it being involved. So that certainly does add another interesting little agenda item to the board meetings this week.
It is going to be a massive, massive week. Let's turn our attention back to the end of last week. How did local markets finish up on Friday?
Well, there's a pretty big sell-off with the S&P ASX 200 finishing down 1.1% to 7,728 points. Every sector lost ground. Retailers and banks led the way lower, with all big four banks dropping sharply. That Commonwealth Bank was off 2%. Wesfarmers was one of the worst for the large caps, down nearly 4%. The exception really were the energy companies. Both Woodside and Santos closed up slightly for the week. The market was down more than 1%. Futures trading suggests though that the ASX should start in positive territory today.
All right, checking international markets now, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. Much happening on Wall Street, Sean?
Oh, plenty happening. Some of the big tech stocks sent Wall Street high, with Tesla and Nvidia leading the way. The tech-heavy Nasdaq 100 finished up more than 1% over the weekend, closing the week at a record high. Nvidia is now worth $2.62 trillion US. Apple's worth about $2.91 trillion US. That gap is closing fast. Microsoft is the largest company on Wall Street, worth about $3.2 trillion. US markets are closed tonight for Memorial Day. There's also a bank holiday in the UK. Quite apart from all that, the US Securities and Exchange Commission late last week paved the way for trading in exchange-traded funds that invest directly in the cryptocurrency Ether. That's the number 2 cryptocurrency. The SEC signed off on a proposal by venues run by Cboe Global Markets, NASDAQ, and the New York Stock Exchange to list products tied to the world's second biggest crypto. Investment companies, places like VanEck, ARK, BlackRock, Fidelity, they're all vying for first mover advantage in trying to create a spot Ether ETF. Their interest, of course, has been bumped along by the billions of dollars flowing into new Bitcoin ETFs ever since January when the SEC signed off on trading in those products. Ether's price has surged in recent weeks as rumours of an SEC ruling spread, though it's still 20% below its all-time record. It isn't quite there. We're not about to see ETFs in the next few weeks because there's still a few regulatory hurdles to get through, but the SEC ruling's important.
All right, there is plenty happening, Sean. We'll be back in a moment with the rest of the day's business news. Sean, the auction clearance rate over the last week came in at 71.5%, slightly higher than a week earlier, and the market looks to be reasonably settled at the moment, wouldn't you say?
It's almost a normal market. And we haven't had a normal housing market for a few years.
Normal is a novelty for us right now.
Yeah, it is. I mean, there were 2,200 auctions last week, so that's actually a bit higher than normal. So maybe that wasn't so normal. Melbourne in particular is holding plenty of auctions. It's had 4 weeks in a row of 1,000 plus auctions, but the preliminary clearance rates and even the final clearance rates are about what they should be based on the past 10 years or so. Melbourne over the last week came in at 71.2%. That was up nearly 3 percentage points. Sydney was 72.7%. That was down 1.5 percentage points. But those figures are about the long run average. In the smaller markets, Adelaide came in at 78% and Brisbane at 70%. They're actually performing better than long-term averages. Canberra was 59%. That's underperforming long-term averages.
Still on real estate, Sean, houses with green credentials are attracting more interest and are easier to sell, according to a new report from online property group Domain.
Yeah, it's interesting, this one. Middle-income households are fueling the demand for energy-efficient homes, which spend fewer days on the market and about 16% or receive about 16% more listing views. Domain's Sustainability and Property report shows that despite the cost of living crisis, green homes have 4% fewer days on the market, with Darwin, Hobart and Adelaide leading the way in terms of quicker sales. In the unit market, Darwin, Brisbane and Perth are leading the way. While the major markets of Sydney and Melbourne haven't recorded quicker sales for green homes yet, they have reported a high number of listing views. Domain says the success of green homes comes down to a growing number of environmentally conscious buyers and lifestyle benefits such as cross ventilation, solar panels, north-facing orientation, all that sort of stuff. Of course, they can also reduce ongoing costs, and so buyers like that.
Sean, this is an interesting one. Australians with AI skills are being paid more, sometimes 17% more than those without artificial intelligence skills. How would you rate your AI ability?
Oh, well, to be honest, as you know, I run a little writing business as well on the side, and we use AI quite a bit. So I wouldn't say I'm highly skilled, but I'm above zero.
You will be asking for 17% more now.
That's right.
You?
Like Simon Anderson and I run this business. I will be asking Simon. No, he's got more skills than I do.
Yeah, you've got to find someone who has less skills than you and compare yourself to them, don't you?
Yeah.
Anyway, sorry, go on. Tell us about the report.
Yes, the AI Jobs Barometer from PwC Australia shows AI-skilled workers employed as education managers, research and development managers and database administrators receive the highest average wage premium, ranging between 14 and 17%. Jobs that require AI skills in Australia had an average premium of 6%. It's actually much lower than the global average of 14%. From 14 other countries surveyed, including the US, UK and Canada. I dare say we will catch up with that. PwC looked at more than 500 million job ads from 15 countries. Probably used AI to do it, now that I think about it. I'm sure they would have. They found that the number of jobs that required AI have increased 4.5 times since 2012 in Australia, compared to 7 times internationally. Other jobs that had a high wage premium for AI skills included advertising and marketing professionals, supply and distribution managers, and industrial engineers, according to a report in The Australian.
Sean, Queenslanders are going to the polls on October 26th, and the election campaign has begun with Premier Stephen Miles yesterday announcing 50-cent bus and train rides for 6 months. This is one of those policies that just grabs the headlines, doesn't it?
It's a cracker, 50 cents. It's about to cost the government about $150 million, and it comes as the ruling Labor Party, which Stephen Miles is the Premier of, trails the Liberal National Coalition in the polls. Definitely going to be a cost of living election, this one. The government's already promising energy rebates, cashbacks for first-year construction apprentices to cover the cost of tools. Now we've got this 50-cent train and bus ride. The reduced fares will be available on all TransLink services anywhere in the state from August 5, not the privately owned transport services. The government hopes reduced train, bus and ferry fares will encourage people to travel more without use of their cars. So public transport usage in Queensland is down about 13% below pre-pandemic levels. Anyone who has driven in southeastern Queensland with all the roadworks going on there realise the need for people to get out of their cars and onto trams and buses and things like that. Anyway, that's what the government's hoping for.
And it's crunch day. We've got crunch week for BHP and crunch day here,
That's
Sean,
right.
for Lend-Lease.
A lot of crunching going on.
Yeah, it's a crunch fest, even.
Crunch fest. I like it.
Yeah, crunch fest. Crunch day today for Lend-Lease.
Can we make it D-Day? Like it's crunch week, but D-Day?
Yeah, okay.
Yeah, okay.
That's good.
Good.
Yeah. It might be crunch fest, crunch week for BHP, but D-Day for Lend-Lease, with embattled CEO Tony Lombardo set to outline the group's strategy today.
Disenfranchised investors are pushing for the group to exit its United States and United Kingdom construction operations, a shift that could result in the shedding of 1,000 jobs. Lend-Lease employs about 6,800 people across its global network. Market commentators have said another main concern is that the global construction sector is under severe pressure and there's not many obvious buyers for Lend-Lease's large-scale operations, according to a report in the Sydney Morning Herald. Now, dissident high-profile shareholders, including Sonara Capital, Allan Gray and HMC Capital, which combined own 8% of Lend-Lease registers, have been agitating for a change from the top down. That forced Chair Michael Ulmer to say he'll step down later in the year. Of course, Lend-Lease's share price has tumbled over the past 4 or 5 years. So it's a very, very big day for the CEO, Tony Lombardo, today.
Yeah, indeed. Now, turning to international news now, Sean, the Indian election continues and we're due to find out the winner in a week's time. We've talked about that previously, just how big a logistical exercise it is. But it seems at this point that Prime Minister Narendra Modi's party will win with a reduced majority.
Yes, so the world's biggest election is heading into week 6. The final week of voting across the nation closes on June 1. We should get the result on June 4. They don't start counting until everyone has voted. So it's not like they've been counting on the way. Modi said his party and allies would win 400 seats in the election, up from about 350 seats that it won in 2019. That now seems very unlikely, thanks to lower voter turnout and reports of close contests in some areas. Modi wants to turn India into a world-class manufacturing hub to rival China. He's been wooing firms like Apple, Tesla and Boeing to expand or open plants in India. The trick, though, which I think voters are very aware of, and it's working against him in the polls, is that to attract some of those companies, he's going to have to make it much simpler. He's going to have to do some serious labour market reforms, like make it simpler for businesses to hire and terminate workers, etc. He needs to do that to get Apple, Tesla, Boeings of the world to invest. And it seems that voters understand that and not so positive about some of those reforms.
The stats for that, I was just trying to remember some of the stats that you gave us kind of 5 weeks ago when the election began. What was it? There's 1.1 million polling places and 15 million electoral agents. It is on another scale altogether, isn't it?
Yeah, it's spectacular.
It is just amazing. Yeah. Anyway, Sean, proxy advisor Glass Lewis has urged Tesla shareholders to vote against Elon Musk's $56 billion pay award and a proposal to reincorporate the electric vehicle maker in Texas.
So Glass Lewis is an incredibly influential proxy advisor. So people look to Glass Lewis when they're casting their votes at shareholder meetings. Certainly the fact that they've come out over the weekend against Elon Musk's $56 billion pay award is a blow ahead of the annual meeting next month. Glass Lewis said the chief executive's package of share options was unduly dilutive and, I quote, excessive size. Surely not. Yes, it did. In a report it released over the weekend, according to Financial Times, it also criticised the proposed move to Texas as offering uncertain benefits and additional risk to shareholders. The proxy advisor also raised issues with Musk's slate of extraordinary time-consuming projects, in particular the 2022 acquisition and ongoing overhaul of Twitter, now known as X, which it claims are distracting the billionaire from leading the world's largest EV manufacturer. Musk is also being somewhat distracted by SpaceX, Neuralink, and the Boring Company, his other assets. Tesla's board has been lobbying investors to re-ratify the $56 billion award given in 2018. That was actually struck down by a Delaware judge at the beginning of this year due to concerns over its size and, of course, the independence of the board. We've got Glass Lewis coming in against it. I suppose you can't, points for trying, but $56 billion US, really? I don't think so.
It's pretty extraordinary. Speaking of extraordinary, Sean, I mentioned this one at the top of the show. Jensen Huang might not be a household name at the moment, but he is now super rich. The co-founder of chipmaker NVIDIA now has a fortune worth $91.2 billion US, thanks, of course, to the absolutely incredible surge in NVIDIA's share price.
So he's now richer than the Walton family members. They're the Walmart family. They have for decades been among the richest Americans. Jensen Huang is now the 17th richest person in the world, according to Bloomberg Billionaires Index. Nearly all of his wealth is in NVIDIA's shares. The chipmaker's share price pushed beyond $1,000 US last week after very strong March quarter results. Its share price is up about 250% this year, not far off Apple, of course. We mentioned that earlier in the show. And Jensen Huang is now worth $91 billion US.
That is just amazing. And, Sean, you have given me a brilliant idea. Seems a little bit kind of cocky to say that my own idea is brilliant.
I'm sure it's brilliant.
It's brilliant. But all this talk, well, you mentioned Walmart and the Walton family. I'm thinking ahead to next Sunday, because every Sunday we release a Sunday feature interview or just a piece of content from the last few years of Fear and Greed that's worth revisiting. And back in 2021, we spoke to somebody who took us through the history of Walmart.
Oh, we did too, yeah.
And the Walton family and kind of how it came to be this global retail behemoth that doesn't have a presence in Australia and why it's never been able to actually make it here. It's definitely worth revisiting, and we might re-release it as our Sunday feature this coming week.
Great idea, Michael.
Oh, thank you. I feel justified now. Up next, Sean, is the Fear and Greed Daily Interview. You're speaking today with Matthew Kidman from Centennial Asset Management.
Sure am. What's going to happen to the market from here? Talk a little bit about Wall Street, mostly about Australia, including a few stocks Matthew's keeping an eye on.
He's always good value, Matthew Kidman. And also coming up is Fear and Greed the week ahead with our resident economist, Stephen Koukoulas.
It's actually a big week in economics. Not much going on last week apart from the Reserve Bank board minutes. This week, there's a bunch of things like retail and building, and the monthly inflation figure is a big one. So we talked to Stephen all about that. As excited as ever about the economic data over the next 4 or 5 days.
Yeah, they are both coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you can sign up for the Fear and Greed newsletter, which comes out every Wednesday, mid-morning on Wednesday. So head along to the website now, pop your email address in, and you'll get an email that is just positively dripping with Sean's opinions on a whole bunch of stories.
Yes, I thought we were trying to encourage people. Anyway, that's all right. Sign up.
Yes, indeed. Thank you, Sean.
Thanks, Michael.
It's Monday, the 27th of May, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.